Good evening, everybody. Welcome to the Lock in Your Success Trade and Market Updates for September 23rd, 2012. We were expecting a slight pullback in the markets last week, or possibly some sideways action, before we got our continued up move. Basically, what we got in the SPX, we didn't get a pullback at all. We got this blow-off move. Normally you'd expect the market to pull back a little bit, but it did not. It's doing the exact same thing it did last time it blew up. Went completely sideways, up, sideways. So we're in that pattern. We got bad news towards the end of last week, or I would say lackluster news towards the end of last week. Markets still didn't back off. So this is very, very bullish action. I would say if we get lackluster or neutral news, then we continue sideways, possibly pull back a little bit. In other words, we just widen this range out a little bit before the market takes off in one way or the other. You'll get a little bit of a struggle between the buyers and sellers, and we will see the market go. Like I said, I'm going to tell you the exact same thing this week as we did last week, is we're either looking at a slight pullback or more sideways action before we continue higher. The exact timing of that, who knows? We've been consolidating for about 2 weeks on some of these consolidations. Here was a couple weeks. So we may get another week of this nothingness. On the NDX, we got the same thing. We got some sideways consolidation. On the Dow, same thing. We got the bounce, sideways consolidation. The only indice that pulled back a little bit was the Russell. Still less than I thought. Like I said, I figured we'd have a down week this week. I thought we'd be further down, more towards the 840 level, possibly even the 830. I say the exact same thing for this week here, that we either go sideways or we continue to pull down slightly. And the reality of things is, if we do pull down into this 1425 area, I think, which I don't think we're going to get there. I really don't think we're going down that far. But if we do, people are going to be looking at that as a buying opportunity, and the markets, look out for the big up move. So, looks like for now, we are consolidating sideways on all the indices except the Russell, which is backing off slightly. All right, let's look at our positions. Or before I look at our positions, I'd like to just quickly talk about the September M3 trade. If you remember, that wasn't going so well. We ended up taking a small loss on that. I needed the market to pull back under 837, which, if you look at the charts, shouldn't have been a big deal. If you look at the Russell, 837 isn't that far of a move in general, but it's certainly a large down move recently. But that was my plan. I decided to lock down my losses at around minus $1,300, and that's what I did. And expire the trade and give myself a chance to win if the market came back. The market never came back. We let it expire. We took the small loss. This trade has been very, very good to us all year, except for February. But if you look at what's happened this year, it's been very, very good to us. So this is no big deal. It's part of doing business. When we go in and make our yearly plan for the trade, we plan on losing it 2 months a year, and this was the second month, and it was a very small loss, like 2 or 3%. So that very happy with that. If you remember, the September Bearish Butterfly actually was profitable. We ended up making 10% on that one of our planned capital, which was, and we're out 21 days to expiration, which was excellent. So goodbye September, hello October. So let's take a look at our October Bearish Butterfly. If you remember, the October Bearish Butterfly was in a lot of pain last week, but in reality, it was acting completely normal. It acts the way a bearish butterfly acts, and this is what happens. Particularly in low volatility, when you get these very large up moves, the position tends to get down a lot of money because the price deflates out of the butterflies. And normally, as soon as the market stops and settles in, the money comes right back into the position fairly quickly. That's what happened here. So everything is acting as it should. Currently, we are showing we're up $675. On Friday, we were actually up about $500. So as long as we open flat or slightly down, as we're indicating in the futures, then this should be at its reduced profit target on in Monday. It may be even be significantly above it. We'll have to wait and see. Normally, I wouldn't take a low profit target on the trade till around 21 days to expiration. We will be 21 days to expiration on Friday, and seeing how this trade was down and how fast the money came back into it, that's telling us the butterflies are temporarily overinflated in price as long as the market's going sideways. I do not like to hold a position when the butterflies are overinflated, because I know if the price starts moving or the Russell starts really moving, then the value is going to drop out of those. So what I'm going to do here is I will exit this position if we're significantly over our low profit target at any point in the week this week. So I'm going to break slightly from guidelines and just drop out of the position and take the money and focus on November for the bearish butterfly position. Also, last week I entered the October M3 trade. I started off early in the week with half of a position because, like I said, this account had a limited amount of capital in it. I was able to put half the position on with the money we had in the account, which was here. I put on a 5, 8, 20 put butterflies. I added a Russell call, which I'm double hedged with calls. And in addition to that, I also had to put three 8, 28, 40 call verticals and two 8, 28, 30 call verticals in order to level out my position the way that I wanted it. Keeping in mind that the delta here is still showing more positive than it actually is. If I look at this position in option view, you'll see I'm actually negative delta, not positive delta here. And a little bit later in the week, or I should say on Friday, when the September position expires, the money comes back in the account during the day, I went in here and I just double sized the position. I bought 5 more of these butterflies, one more of this call, one more 790 call, and 3 more 828 840 verticals, 2 more 828 30 verticals, and here is how the position sits. Again, we're actually negative delta in this position. Everything is looking perfectly fine, and let's take a look at the November bearish butterfly and talk about that a little bit. If you remember, I did not enter this 56 days to expiration. I entered it early. I entered it early because I saw opportunity, and all this year I've been entering at 56 days from expiration, even though it hasn't been the greatest day to enter it. I'm just kind of trying to make a point here, is that when you see opportunity, you should take it. Some days 56 days is not the best day to enter because of the way the price is moving. So what I normally do here is I start looking around 70 days for conditions that I want to enter my bearish butterfly in. Just so happens that last Thursday we got this big up move that broke the top of the channel. We got a continued up move, and if you were in your October bearish butterfly, you know butterfly prices were low that day, and I saw that as a tremendous opportunity to jump into a bearish butterfly for November, and I just went ahead and did it and posted it out to you guys. As of right now, the position is up $284 with a $1,500 profit target. Now, I did have a lot of people who didn't follow along, which is fine because you're not supposed to be following trades, and they waited to the 56 days to enter. I think what I'm going to do is I'm going to go ahead and enter into option view here, and we'll start a new account. We'll start a new account called Guidelines November Bearish Butterfly. and we'll make a pretend trade here. We'll start this last week, and we will go to Friday at 3:30 and go ahead and put on a bearish butterfly start position with a 10 lot. What I can do here is, I know if I start at the 8:30, just because the volatility is so low, I'm going to have a delta theta problem. 8:50 is too close, so we'll just start right at the 8:40. So we'll do a different time slot. And it's giving a price of $14.81. I was asked, well, geez, do I want to pay $14.81 for a butterfly? Do I want to? No. Will I? Then yes. I mean, it all depends on how bad you want to get into the position. If you're the type of person who is, if you want to practice in a manner where you're relying on trading as income, and you really need to be in the trade, then maybe you're the type of person who doesn't pay attention to charts at all. Then you just go ahead and you pay the money. You go ahead and get in. You just understand you're going to have a shorter range than normal. You're going to have, because we have a very close to 1.5 to 1 delta theta ratio, so you just have to be aware of that. If you're the type of, if you're trading for extra money, or you want to improve your chances, and you're doing a larger trade, and say you're doing a 10 lot normally to start with, so you're starting with 10 butterflies instead of 1, you could enter with 5 just to make sure you're in. And then you could wait, see if the market moves, see if prices improve, and then scale into the rest of it. So you're scaling into your first part of your position so you didn't lose so much money. The other thing, if you really don't need to trade at all and you don't want to push it in this low volatility environment, then you can just simply wait, see if the market actually shoots up. Because if the market shoots up, you should be able to get into this a little bit cheaper. You just go ahead and put the price in that you want, and if we, like I said, let it sit there. And if you don't get in, you don't get in. You just go into December early or something if you wanted to do that. But that's basically how I would handle it. It's all a function on how bad you want to get in. If you want to get in, you have to pay. You don't really have a choice. If you're not in such a hurry, you can wait. I would say you could wait as low as 45 days. If you're not in by 45 days and you still don't want to get in, then I suggest you just do another trade, or just wait till December and do the entry there. But for now, let me just convert this one so we can watch it with my modified entry. Sometimes you might find you may even work out better here, because if you start at the 840 level and you happen to get scaled in at 880, I don't get scaled in, and the market backs down, we may end up making more with this position than with the one I made. So sometimes that kind of backfires on you. But either way is perfectly fine. And if you need to get in, then just go ahead. I mean, you have to pay up. Like I said, it's 1486 today. If I was expecting or anticipating a large, fast market move, then I would probably wait a few days, see if it happens. Right now I'm not. I don't see it in the charts. I just kind of see more sideways movement. Maybe if you're lucky, we'll get a shot up to here, and you'll be able to get in a little bit cheaper. However, if the market decides it wants to sit, the price is just going to go up. So, and we just don't know what the market's going to do. So it's tough with low volatility. You have to just kind of bite the bullet and do it, and get it over with. All right. So those are the 3 trades we have on. The October bearish butterfly is doing well. I'm looking to get out of it as soon as I can. At my low profit target, November bearish butterfly is doing well, and we are in the October M3. All is doing well. I will keep you updated with any changes. Have a great week, everybody, and I'll be talking to you soon. Good night.